In our past few videos, we have been dealing with everything about our economy, our stock market, and all other things you need to know in growing your money. In that case, it is high time for us to talk about our precious metals and how they played their role throughout our history and how they can still hold the reins of our future in investing. JP Morgan, an icon for being a financier and investment banker, once said, "Gold is money. Everything else is credit." This made us trace back all the way to the 1600s to understand what he meant. But time and time again, people always ask, why do you need to invest in gold or precious metals anyway? The thing is, it is insurance against uncertainties, insurance against the unknown. Hey guys and gals, welcome to another episode of Financial Ventures. We are so glad you're back again here in our channel, and with that being said, we'll be exploring the ABCs in precious metals and what you can gain or not in investing in them. If you like the content, be sure to like the video, subscribe to our channel, and hit the notification bell for more informative financial videos. Remember, all you need is financial ventures in your life's adventure. Gold and silver have been the main precious metals most people are aware of, but we do have others like platinum, palladium, and rhodium, which make up the platinum group of metals. Precious metals have been around for thousands of years, and they are mostly used for jewelry and industrial use, but they also played a huge part as investments. Did you know that platinum metal group prices are controlled by industrial movement in the economy, as they are thoroughly used in glass manufacturing, petroleum, chemicals manufacturing, electronics, systems for emission control, and even pollution control? Whereas gold tends to be controlled by macro developments, or its value simply changes if the economy is shifting into large economic development. Come to think of it, gold has been around for almost 5,000 years. Egyptians used it to decorate their tombs and caskets in 600 BC, and Greeks and Romans used it as their currency during 500 BC. Oh yeah, and silver? It was mined 3,000 years ago, and in fact, built many empires in doing so. Silver paved the way for communities to expand. Before we give you the pros and cons of investing in precious metals, it is important for us to give you an idea of the three types of money, as they play a significant role in the next few minutes of our discussion. First, commodity money. For thousands of years, people have used different commodities as mediums of exchange for their products and services. They used gold, silver, cattle, seashells, and anything under the sun that you can barter in exchange. Over time, they realized that bringing huge amount of commodities can be a hassle. Therefore, a new type of money came into the picture. Second, the representative money. Yes, pieces of paper represent claims for certain commodities. A good example is the US dollar during the gold standard. People can use their pieces of paper to trade and buy services and products, but they can always go back in trading using gold if they want to. Eventually, the gold standard stopped at some point. We'll talk about it later. Third, the fiat money. Well, fiat money does not in any way buy back commodities, but was declared as legal tender by the state. So yeah, fiat money is used to fulfill certain obligations like paying our taxes and the like. Fiat currency is our money today. It has value because we believe it has value. We have now established the three types of money. Let's take a quick tour around the gold standard age and let us explain it to you in a simpler way. 2,600 years ago, the first gold coin was minted and used for trade. Later on, people stored their gold in a vault, and they received receipts instead. These receipts were what they used to trade for commodities. This is where the paper money was invented. In the 1900s, most currencies were based on the gold value, which we call the gold standard. People could just go to a bank and exchange a piece of paper for gold, but everything changed in 1945, where currencies were changed to be based on the dollar. An ounce of gold is equivalent to $35 during that time. People were not allowed to exchange their money for gold, but only central banks were. In 1971, President Nixon took the US and the whole world from anything related to the gold standard, as several countries lost their confidence in the US dollar. This made US gold deplete quickly. That is why our fiat currency is backed by no other commodities, not even gold. It's just based on the confidence that people have in their US dollar. Yep, as we told you, fiat currency is all about trust and confidence. How cool is that? And as promised, before we end the video, here are the pros and cons of investing in precious metals. As mentioned in the gold standard discussion, any currency is not backed by gold anymore, so that means our precious metal gold is used and traded like a commodity in the open market. First, gold has been around for thousands of years, and they were valued for thousands of years too. While this does not give us a 100% chance that they will still be valued enough in the future, but it's still a possibility. Second, gold or any precious metals are a good store value, which means you can leave yours behind and your future generation can still find it helpful and useful. Do you like watching Pawn Stars? Yeah, precious metals were worth more than you can imagine. Third, if anything happens in a certain country, you can always take your precious metals and go. Unlike any other assets, you cannot bring your real estate while running away, eh? And of course, we have some cons as well. First, unlike stocks that can generate dividends, and unlike real estate that can generate rental income, precious metals are just pretty. They don't generate passive revenue. Second, it may have a good store value, but all it can do is keep up with the inflation in the long run. They are basically owned for wealth preservation, rather than wealth enhancement. Third, if you own precious metals, you have to have a good vault to store them in, or else burglars will be very happy to take a tour around your house. Fourth, well, you can invest in an ETF, but that also means you wouldn't physically own your metals, and you just further expose yourself by letting a third party keep them all on your behalf. You see, owning precious metals can be an investment or hobby, and their history is so rich that you can even use it as a conversation piece with your friends. But hey, at the end of the day, nothing beats a well-informed decision and maybe a couple of gold coins. We thank you so much for listening. Comment down your thoughts below and suggest what else you want us to talk about. We hope to see you at the next one, and remember, it's better with financial ventures in your life's adventure. Yep, precious metals cannot buy us happiness, but they can definitely secure our future.